Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, with news of a new surge in property investment from China by their frightened wealthy. But first, Federal Reserve Chairwoman Janet Yellen has repeated her view that the central bank is likely to start raising interest rates this year. Recent weak economic data and a call from the IMF to delay the rise until 2016 had dampened expectations of a 2015 increase. She is ignoring them, and in a speech over the weekend said it would be appropriate to start normalising monetary policy this year. Bond markets may be headed for a fall this week. Across the Atlantic, and oddly, the Greek government asked for and got harsh concessions from its parliament. All the EU was looking for and more to try and stay in the Eurozone. They are offering to get a €54 billion bailout. But European finance ministers did not agree on a bailout, which would have made it their third since 2010. Following their impasse, the heads of EU governments met and concurred, saying no more money until the Greeks enact key reforms. Meetings are ongoing. Basically, no one trusts the Greeks to do what they claim, even when they pass laws saying they agree to bailout terms. They used up all their credibility in pre-negotiations. Grexit seems even more likely now. In Asia, and despite 2 days of stock market gains, the numbers in China make the Greek crisis look like chicken feed. More than $4 trillion in value has been lost. More than $250 billion in margin loans are outstanding. And this is affecting more than 90 million retail investors. Chinese equity markets are all about retail investors, unlike Western markets, which are dominated by professional fund managers and pension funds. The stock market turmoil in Shanghai is having echoes here. Real estate agents the world over are bracing for a surge in new interest in their already hot property markets, with early signs that wealthy Chinese investors are seeking a safe haven from the turmoil in China's equity markets. In New York, US Treasury 10-year yield benchmark jumped at the close of last week on the assumption the Greek crisis would be resolved, rising to 2.4%. Yields may push further higher today on the Yellen comments. All markets held their lower levels on Friday. The US benchmark price is now just under $53 a barrel, and Brent crude is just under $59 a barrel. The gold price is also holding its recent lows now at $1,160 an ounce. And the Kiwi dollar opens this week essentially unchanged from where it ended on Friday at 67.2 US cents, 90.5 Aussie cents and 60.3 Euro cents. The TWI is still at 71.5. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.